Hey guys, if you have not seen Moon Platoon, the new Motley Fool tune that they're singing here, this is their question right here. Motley Fool has, if you guys aren't aware, been very critical of the GME saga, and even Meatball with his snazzy little tie cannot stop Motley Fool from just swinging their position with the with a ring of Amazon versus GameStop, which is the better buy. Well, let's take a quick look. Make sure that this isn't FUD, fear, uncertainty, or doubt being spread through the mainstream media. But the only thing that I ask is making sure that you guys watch until the end of this video and give Meatball a quick boop on the nose with a like button so that people can go find this video that aren't you. Helps the YouTube algorithm and helps the Moon Platoon grow. We're on our way to 100,000 subscribers. We'd love to have you with us. As great as an investment Amazon has been for long-term growth investors, it's no match lately against the meteoric stock rise of GameStop. This is a weird time to start talking about the meteoric rise of GameStop because today we have been seeing a pretty tasty dip. Michael, I'm going to cover your super in just a second, but your stock is on deck. It's the video game retailers saw its stock more than triple last year, and this year it catapulted as a, in quotes, meme stock. Even after retreating sharply since their frenzied peak, the shares are up 741% this young year. Oh, young year, little youngie. So the point of this is that, you know, they're trying to hype up the stock. They're trying to say like GME is great, but well, let's take a quick look and see exactly if Motley Fool has changed their tune or not. If this is just a quick clickbait for us to be able to actually see, hey, we're positive about GME, maybe. If we draw the starting line at the end of February last year, GameStop is a stunning 45 bagger. That's a jaw-dropping spurt in a little more than 13 months. Amazon's been a perpetual market beater, but you would have to go back 12 years to find the point where the world's leading online retailer is also a 45 bagger. The GameStop is the hot stock, but the fundamentals are overwhelmingly in Amazon's favor. Let's size up each name to see which one is the better buy right now. So here's Motley Fool with the clickbait. It's a great stock, but Amazon, so much better. Right now, it's impossible to compare the two, right? GameStop might be in the future the Amazon killer, but right now, it's a mostly brick and mortar with limited e-commerce until it starts to transition into that space. Here's an esports girl in an esports room somewhere, maybe. I'm not sure. It looks cold in there. GameStop comes to play. Step aside from the hype, and GameStop investors are caught between a stock and a hard place. The company has posted 12 consecutive quarters of year-over-year declines in revenue. There's the FUD. Oh, they really reeled you in. They're like, GameStop's great, but their fundamentals are bad. Haven't you understood that this entire squeeze situation is disconnected from the fundamentals? Come on. Even when we saw that Jim Cramer video, he's like, fundamentals don't matter. At the end of the day, that's one of the hard truths that even an ex-hedge funder can spout, is that when we're looking at the squeeze potential, we're not looking at the fundamentals. The empire is shrinking its physical footprint, closing 12% of its stores over the past year. This isn't necessarily a bad thing, especially with the surge in e-commerce giving investors hope that a nostalgic brand can be repositioned in a digital future. GameStop will have to keep cutting costs if it wants to compete more effectively with Amazon and other online specialists. It's kind of like saying, now, you know, the hottest man in the world, you're going to have to really step up your game if you want to be hot like him, Mr. GameStop. Who do you think you are trying to keep up with Mr. Universe? Right, this is a harsh comparison. Amazon is like a $3,000 plus stock right now because of the fact that it relies almost entirely on the e-commerce world, right? GameStop doesn't. GameStop does not. It mostly relies on the high margin trade of used games. And there's the rub, is that these two companies are in very different stages of their life cycle when it comes to the e-commerce world. Let's see. Net sales have been cut in half over the past 5 years, down 46% from where they were 5 fiscal years ago. A few years ago, GameStop was the money machine, but has posted 3 consecutive years of steep losses. GameStop doesn't look like the part of the stock hitting all-time highs this year, and with short interest dropping, oh, now you're spreading real FUD. With short interest dropping, we just saw an article about what the true short interest is right now, and let's just jump into that real quick. I'm sure you guys want to be able to see. Oh, it's not this one. It is what is the short interest rate here. Hold on, it's in my description. Here it is. So this is someone digging into shortvolumes.com, right? Their thought example is that the volume short is 55% of the volume of the day. That means it can be covered with the remaining 45% of the day. So too long didn't read. This right here, it means that the open shorts are at least 60 million shares, which is 110% of the free float. That does not sound like a declining short interest to me. This is assuming that no other trades were made. If you, your brother, your uncle, dad, or your neighbor's cat bought a share, this number could be at a maximum of 800 million, right? So it's 1500% of the free float. So this DD comes out, it gives a little bit of back of the envelope calculations, but at minimum, very conservatively, they're looking at 60 million shares for the short interest calculation and the float calculation here. So is there life for GameStop beyond the meme squeeze? Motley Fool, you've just been countered. The key to GameStop justifying its 45-fold spike since the end of February last year is its ability to transform. It will die if it stands still, and I agree. This part is important. It's not gonna stand still. We've already seen major pieces putting into place of how GameStop plans to transform. So it will die if it stands still, but we've already seen that it is not going to. There's fresh blood flooding the boardroom and its executive ranks. Will that be enough? It's playing from behind at this point. Thank you, Motley Fool, for the FUD once again. Let's see how they are going to praise Amazon. In the same 5 years that GameStop's business has been roughly cut in half, we've seen Amazon revenue more than triple. 44% year-over-year top line spike in its record-breaking holiday quarter. This is a lot Amazon excels in, right? It's also where GameStop wants to be. It's been selling video games and related gear online for more than 24 years. Amazon's Twitch is the gold standard for diehard gamers looking to share their in-game streams, a market that GameStop would love to own. Digital distribution is largely in the hands of console makers and software publishers. But if GameStop sees an opportunity in joining the crowded realm of cloud-based gaming services, it will have Amazon's recently unveiled Luna to reckon with for now. Everywhere GameStop turns for growth, it seems like Amazon is already there. And this is the ubiquity of Amazon here. Just basically said, hey, you know, it's so hard to beat them. Well, as of right now, there's a clear path forward for GameStop to start turning the wheel, right? We've already understood that Ryan Cohen is a master of being able to corner one piece of the e-commerce market, right? What he did with Chewy is what we're expecting him to do with GME, the Amazon killer here. But GameStop's enterprise value of 11.6%. Oh my God, $11.6 billion is less than 1% of Amazon's $1.7 trillion. And it doesn't have to be. You don't have to compare yourself to the most handsome man in the world, the most profitable e-commerce website in the world. You just have to take all of the gaming market share. And this is what I think is what I think you should take away from this article, Spreading FUD. Once again, Motley Fool, you haven't really changed a single bit. You've really proven yourself again. Thank you so much for watching this video to the end. I do think that this is the chance for you guys to go and click that like button, click that subscribe button, and thank the people here as well. And I really do appreciate you guys coming on to the live streams as well. I would like to see you here, and we'll see you in the money. Sweet.